Hi, Paresh. Well, look, I've known you, over 20 years now. You were a floor trader on Life when they actually had floor traders doing all the hand signals. And then you co-founded a hedge fund, which went on to be a $2 billion, if not more, actually, hedge fund, Marble Bar Asset Management. So, you know your stuff when it comes to trading. You've seen what I've put together with pipspredator and the indicator and the algos. I'd love to hear what you think, what you like about it.
Right. Yes, we have known each other for, well, coming on to 20 years now. Has been a while for sure. And what's interesting throughout this whole journey of trading, I guess, one of the key points is that most novices or new traders tend to overthink, tend to suggest when they're in a trade, they'll try and second guess, is this the right move to make? And they'll keep looking at the screen and probably their thoughts will get ahead of themselves and they'll make the wrong decision. The thing about pipspredator, your particular algorithm, it's interesting. It takes a lot of that thinking away if you allow it to do that. So if you're in a position and you're given instructions, very clear instructions from the system, where the stop losses are, where the profit taking is, and you could make it very simple and do nothing else apart from follow those signals, and you'll probably do quite well. So it's a very simple.
Well, I should say there's a couple of bits I'm going to add into that, which is we want people still to trade select. We don't want them completely to switch off their brains, because the human brain, as you know, can process a lot more data than any algorithm can. So the algorithm's supposed to do 90% of their work, and then you can still trade select, as we were talking earlier, where you want to narrow down when you're scanning the various charts, and you narrow down to the ones you will focus on.
No, you've got to have an awareness of the markets, because if you don't see the change in sort of trends and just rely on the system, that's probably not a good idea.
Yeah, and that's where the trade selection comes in, because sometimes people ask me, they go, "Oh, well, can't we just put it on a black box and flick a switch?" And I said, yeah, well, if we did that, we'd all be on a yacht and having $1 trillion in the bank account.
Right.
What it's supposed to do is remove 90% of your workload, so that you're just spending those 15 minutes using trade selection techniques, which I teach them, to narrow it down and bang, increase the odds. You mentioned take profit. Of course, we didn't get a chance to talk about this earlier, but like you guys used to do on the floor when you're trading, you're adding to your winning positions as well. Ideally, as you get a bit more advanced. I mean, tell me about floor trading and when you used to do that.
Well, that was a slightly different ballgame to this, in that you're in an environment which allows you some flexibility, and where it's evolved to, you don't have that human connection so much. So you have to rely purely on your instincts, 100% on your instincts. This way, you're relying on your instincts, but you're feeling the market on the floor at the same time. So you get a sense, far greater sense, I felt on the floor. But to the trading style there, my trading style was simply that if I'd made a certain amount of money, I would take profits and just let half of it run. So I'd always be up, basically, let half run. If it comes back down to my entry point, which is when my stop loss, I'm still up half the money. So it wasn't so much, because it was so volatile, I didn't really add as much as probably the larger traders like David Kite would do. He would follow the market all the way up and all the way down, basically, but it wasn't quite that.
And that's a fantastic point, because I try and cover this in my webinars and in the videos, that in actual fact, the traders don't necessarily have to do exactly, okay, what I'm going to do is, here I'm going to add to my winning position, the equal amount position, because some may pyramid. They might say, well, I'm going to add half a position, or as you've said, you might take half your profits and you're still letting half of it run. Where, as you rightly said, you won't make necessarily as much as somebody who doubles up instead of taking half off the table, but at least you'll have more to show for it if it pulls back. And it really comes down to, I guess, personalities and what you want to do between the trade-off, which is the number of winning trades and profitability, because people assume, oh, the more winning trades, the more profits you have. But in actual fact, it isn't necessarily as simple as that.
No, it's not as simple as that at all. Particularly because I was working on the largest product on the floor. One tick movement used to cost me £150, so I didn't have the luxury as a lot of the other floor traders did, where one tick would actually cost you $7 or $8.
Which in today's money would be, I mean, to the spread bettors, that's £150 a point.
That's correct.
And the CFD traders, yeah, it's £150 a point, which, you know, well, you were a floor trader and you were with David Kite Securities, who was in, that's how we met. He was in my very first book, Mind of a Trader, 20 odd years ago. But yeah, sorry, go on.
Yeah. So it was slightly different, my experience, but that's how I traded. You know, every day would be, it's all about longevity. If this is going to be your business, then you need to ensure you're in the game for the long term, and you can't be frivolous with your own money like that to take such
yeah,
a stance. Yeah,
exactly. No, I'm always telling traders, I'm always reminding them, look, 70% lose money. You have got to start with a demo account, start with the smallest amount that the broker will let you trade with. Now, you used to get some great advice from David Kite about if you'd made money or if you'd lost money. More importantly, if you'd lost money. Mm-hmm. You want to share some of those insights and advice you used to get?
Well, yeah, I could probably, the first day of my trading, I was told to just get on with it. So I did. And I lost £10,000 of David's money on that day. Don't know if I should mention that, but
and that's going back over 20 years, so that's
correct.
Probably double that now, I guess.
Well, that's going back to 93, so more than
more than 20 years.
Yeah. More than 20 years, 93, when I first started trading by myself. And what was interesting is he went away on holiday for 2 weeks, and so I was biting my nails, thinking, right, I'm probably not got a job when he comes back. And I got back, and he actually laughed and said, right, now I'm going to show you how to make that back. Yeah, and that's where the mentoring started. So he just wanted to see where I was at. Yeah, clearly shooting from the hip.
Yeah,
young chap, didn't know any better. And from there on, he very gently showed me and mentored me into best practice in taking profits, making your stop losses all there, ensuring you have a daily target as well. So if you have a daily target, right, if I lose £500 in that day or £1,000, I just stop trading and you watch the market.
Yeah,
because you've got something to learn. And equally, he didn't tell me to stop if I made a certain amount of profit, but if I made profit, I just stopped. If I made a good amount of profit, I'd stop. My target was £500 for the day.
Yeah,
not bad for a day back in '93.
No.
So that was my style.
And you know, on that point, you know, I'm always advising my apprentices. I say to them, look, I want you to do ideally one trade a day. And they say, why? I want to do lots more. Surely the more trades I do, the more money I'll make. Well, I said, no, because if you lose money, you're probably not going to be thinking straight. And if you make money, you're not going to be thinking straight, because you're going to think, oh, it's all. And so I think, you know, as David had mentored you, to have that discipline to say, no, we're going to do what we're doing, and we're not trying to fill our boots each day and push our luck. Mentoring, you know, as you know, as part of what I do with pipspredator, it's giving that mentoring. Now, you were mentored by David. It's how I, like I said, met you, and he advised me. We spent a lot of time together working out how good traders should trade. Tell me about, you know, what were some of the great things you do in mentoring? What makes a great mentor? And hopefully I've got it in what I'm giving my apprentices.
Yeah, well, there again, it's lead by example. So he gave me strict instructions to make sure I was there at 5:30 in the morning. Yeah, and he would probably ring. Well, no, he did ring. He'd ring at 5:35, and he'd put a trade on himself. So the way he mentored was by example. He just took trades on, and he'd leave it all day, and I would be jobbing the market basically in and out all day. But so I didn't realize that's what he was doing at the time, of course, because you think I'm just being his broker. But what he was actually doing, very subtly, was showing me how to trade. So I picked up the way he navigates the market.
Yeah, and fantastically, you know, what's happened since obviously all those years ago, almost 30 years now, is we've got technology now, and I try through the Telegram channel, show people the market. I tell them, look, monitor it and try and teach them through videos. And we wouldn't have had all this when we didn't even use the internet back then, but you know, the videos to do that. And I think mentoring can be accelerated now. I mean, presumably the kind of technology, if we had then what we've got now, you would have learned a lot sooner.
You would have done, for sure. The markets have got a bit more choppy because there's more players in it.
That's true as well.
Yeah, so it's slightly different for that reason. But so it's not always as easy as it seems. So you've got to have these sort of very disciplined approach in pick your markets. If it doesn't feel right, just don't do nothing, and maybe just watch for the day, which is how I tend to do it.
Fantastic. Paresh, thank you very much. I think we should do more of these. I think we should do a whole series of these where we talk about specific things. I mean, you and I have spoken on stage before at various events, and I always find it fascinating, even though I've heard you speak and give advice on trading, but I still find it incredibly fascinating each time. To hear about the floor trading experiences. Like I said, I could hear it 100 times, but it's still so important and so interesting. So I think we should do a few more of these, and
I'd be glad to.
I'll post this so the apprentices pipspredator.com see it as well. Thank you very much for
Thanks for your time.
Really appreciate it.